Hello guys, and welcome back to a new video and to a new NQ market review. It's been some time since I did market reviews, but today's price action was really interesting. And if we take a look at the higher time frame or the 15-minute time frame of today's price action, we can see that this was really bad price action. Some people call it, or choppy price action, and it was almost untradable for a lot of traders, and I have seen a lot of complaints in social media about today's price action. So today I'm going to show you my secrets of how I approach this price action right here. I'm going to give you 3 secrets or 3 advice of how you can navigate this price action successfully, right? So this was the trade that I took. The first one, it was from here. It was on the 15th second actually. I'm going to show it to you later. But as you can see, a long from here, this was like a 2.4 or 2.5 hour trade. And then another short from here. And this was actually a loss, but a partial loss. So my original stop loss was here. And then I reduced it to this high right here, and I took a partial loss like 0.6 R or something. So I ended the day in like 2 R. But let's talk about the analysis and how you can approach today's price action, right? So let's get started. So as you can see, today's price action was really, our price was in a tight range, a lot of sweeps. Price was constantly taking highs and lows, highs and lows. There was no clear direction on the 15-minute. On the 1 minute, also price was unable to travel in one direction. So the number one advice of how you can approach this type of price action is, first of all, be very selective with your trades and always try to take trades inside a higher time frame zone. Right, inside a higher time frame zone. And let me give you an example. As we have seen in the second half of August and the first half of September, right, price was either trending heavily to the downside or trending heavily to the upside. So now you don't need always to take a trade inside a higher time frame zone. For example, if price was trading to the downside and hit a higher time frame zone and now a bullish zone, and now it is rejecting heavily from it, now you can take lower time frame entries, maybe here, until we reach a higher time frame target. So this long side here was based on the rejection of this higher time frame zone. But when price is in a tight range like this, it is better to take trades only inside a higher time frame zone. Maybe this is also a bearish zone, so take trades inside here. Avoid this right here because you don't know if price is going to expand to the upside, right? And there is a good possibility that price is going to be like this. Now you might ask, how do you expect this type of price action, that price is not going to be like this, is not going to tap into a higher time frame zone and then trade heavily from it, trade away from it? All you have to do is to take a look at what happened before. So for me, I said I like to trade after 10:30. So if we go to 10:30 a.m. New York time, I can see that here price was in a tight range. So I'm not expecting after 10:30 that price is going to just heavily trade to the upside or the downside, right? I'm going to approach the market based on what I'm seeing in the last hour or two, right? So here, as you can see, price, we have like a shy expansion to the upside, right? And then a very choppy and deep pullback, another shy expansion to the upside, breaking this high, and then a deep and a choppy pullback. So when I write on my journal about the market condition before I start to trade, I'm gonna write that. As a matter of fact, let me show you what I wrote. So this is what I wrote before I start trading. market conditions. This is where I like to write what is the market condition before I start trading, like in the London session and from 8:30 to 10:30. So I wrote that the market is not volatile and we are in a small range. Not every sweep can lead to an expansion, and reading and aligning ourselves with the higher time frame is crucial. So this is me preparing myself to be selective with my trades. It is very important to write this down and give it a deep thought instead of just thinking about it in your head, right? Writing it down is very crucial. So that's the first advice I can give you. Be very selective with your trades, be patient, and also take trades inside higher time frame zone. The second advice is trade in extremities, right? When you are trading in the extremes of the range, you have a very good chance that price will reverse. For example, right here, we can see that price after it swept this low, usually to the upside. So this is the extreme of the range. And this is the extreme high of the range, as you can see. And now we have another push. Now we traded from here. We have another push to the upside, right? Here we have another range on the BN session. So where is the extremities? We have this and we have this. So trying to trade inside on it here, it's not gonna end very well for you, believe me. So the second advice is take trades above the range and below the range, right? Bottom of the range, top of the range. And also pair it with the first advice, which is take trades inside the higher time frame zones. The third advice is that, this is the last advice before we move on to the actual NQ market review, is that if you see the PM session like this and you don't have enough experience with this, right? You see this choppiness or this small range, and the pullbacks are not very pretty. Expansions also shy, as you can see. This is not a beautiful expansion. A beautiful expansion is just like consecutive up close candles, right? And as you can see, this is a lot of up move and then down move and then up move in a single expansion leg, right? So now what you can do is skip the AM session and you can come back on the PM session. A lot of times when the AM session is in a small range, in a tight range, the PM session is going to end up like one direction move, right? Well, this was not the case on today's price action. The PM session was actually smaller. The range was smaller than the AM session, but a lot of times the PM session is going to trade in one direction. So the main difference between a trendy day and a tight range is that in a trendy day, all you have to do is to identify a higher time frame reversal zone. So for example, price was trading to the downside, and here it's either swept a low, a higher time frame low to the left, or hit a higher time frame zone and it is rejecting heavily from it. So now all you have to do is to buy every pullback. Every pullback right here is an opportunity to buy until we reach a higher time frame zone, right? But again, this is not the case right here, because pullbacks right here can be very choppy. Price can easily trade all the way to here, then here, right? So price is not in a hurry to reach its targets. Okay, so now let's talk about the trades that I took, right? So first of all, let's go to the 1 hour. I had some conflicting signals on the higher time frame, but let me show you how I approached this. So let's start on the 1 hour, right? On the 1 hour, price swept this high right here, right? It swept this high and it fell to close above its zone. Now this tells me that price is likely to trade to the downside, right? And we might take this low right here. I'm not very sure about this, but I was thinking that at least you're going to see a pullback into this range right here. I'm not sure if price is going to take this low, because this low already swept liquidity from here, but I'm sure that price is likely to trade to the downside, right? This is on the 1 hour. On the 15 minute, we don't have that sweep, but we have a break of structure. We have body closures, right? Either way, body closure or sweep, in case of a body closure, we can expect a pullback, right? And maybe a continuation of the trend. In case of a sweep, we are also expecting a rejection. So either way, I was expecting a rejection from here. Now, on the 1 hour, come back one more time to it. We have the CSS right here, right? So this is a candle responsible for the sweep. It was actually this one right here, but it is actually one candle on the 4 hour right here, right? And this is crucial because sometimes price will not hit that 1 hour CSS, that unmitigated zone, but it can easily hit like a higher time frame unmitigated zone and reject from it. So make sure to scroll up on the higher time frames and see what's going on above you, right? So let's come back to the 1 hour, and I outlined that 4 hour zone after I've seen a rejection from this right here. As you can see, we have a rejection from it here. So when I went to the 4 hour, I have seen that, okay, this right here is a 4 hour zone. Now, if we come back to the 15 minutes, again, this is not like the easiest price action to read the higher time frame from. This is why I'm taking too long. But if you check my previous NQ market reviews, it's like straightforward. So we have like a pullback from here or a rejection, and we trade to tapped into the 50% of this range, and we also swept this low right here. So after sweeping this low, we have the CSS above this candle, the candle responsible for the sweep. I was actually watching this during London session, right? As you can see, we traded above it, break of structure, returned back to it, and then we traded to the upside, right? Now let's go to the 5 minute. So price was rejecting from it, and as you can see, we have another sweep right here, another CSS, break of structure, return back to it, and then traded away from it, right? Beautiful. This is the model that I use. Now here what happened, price right here, we have a sweep, right, inside this zone. We started turning to the upside, and this was actually on the 15 minute, I'm sorry. So we started turning to the upside, and we failed to take this high. As you can see, only sweeps. We failed to take this high, right? So now this will become a weak low because it failed to make a new high. So price, what happens is that price targeted this low right here, and it failed one more time to take this low. So now this will become a weak high because it failed to take or to make a new low, right? So what happens is that price after that liquidated this, attacked this high, and it tapped into this 4 hour zone, right? And as you can see, it looks better on the 15 minute, right? So we tapped into this zone, right? This 4 hour zone, and we also swept this high right here, and we have the CSS confirmation, right? Which is basically a candle closing below the candle, the previous candle that caused the sweep. If we go to the 5 minute, we can actually refine it. All right, so here we go. This is the sweep and the top to that 4 hour zone, and then price started trading to the downside. All right, now here we have another sweep, yet another sweep. As you can see, a lot of sweeps. But if you track the sweeps again on the extremities of the range, you're gonna get really nice opportunities to trade away from the lows or the highs, right? The extremities, not here. For example, we have a couple of sweeps here, we have a couple of sweeps here. Now, trade the extremities of the range. Now, we swept this low, and then we have the CSS confirmation right here. the CSS actually happened on the 1 minute. If we refine it, for example, here on the 15 minute we have a sweep and a CSS, but we refined it the 5 minutes. So on the 1 minute, if we go to the 1 minute time frame, so as you can see here, we cannot refine this on the 1 minute because it is a body closure, right? But here we can refine it because it is also only a sweep. Now, the CSS happened right here with this candle, the candle that caused the sweep, right? And then price broke above it right here. Beautiful. We put in this high, trading to the downside. Now we failed to take this high right here, and now we traded to this zone to mitigate it, right? Now, if we go to the 15-second time frame, all right, so remember my first advice for you, try to trade in the extremities of the range and try to take trades inside a higher time frame zone. So now we have this higher time frame zone. So if we go to the 15-second, we can see that we have a nice sweep right here, and we tap perfectly into the 70%. We have a sweep right here, but there was no body closure above the candle that caused a sweep, right? There was nothing here. But here we have a body closure above the candle that caused a sweep here with this candle. It was a shallow one. And then I took an entry from here. It was a market order, right? Stop loss was really tight, so I didn't wait for a deeper pullback, right? Just market order right here, stop loss right here, and I took my profit above the high right here. This too high, so I put it here. And as you can see, we swept this and then traded away from it, and then eventually traded to the upside. We have a sweep right here, CSS trading to it right here, and this is only a pullback into this zone. And then we traded to the upside. So this was the first trade. And now let's talk about the second trade. I'm not gonna spend time inside here, right? It's gonna take a lot of time. But as you can see here, with this in mind, with this sweep in mind, I was thinking, all right, price, we have two choices. Price might either trade to the upside to take this high and mitigate deeper levels of this 4-hour zone, or it can mitigate this 5-minute zone and then trade away from it. Either way, I'm going to take my entry, my long from here. I'm not going to take it here or here. This is the optimal area to enter a long from, right? And here, as you can see, we have another beautiful sweep here. The last sweep, and then price traded to the downside, right? Now, let's talk about the second trade, which was a partial loss, right? So I was actually waiting for price to trade below this low. Although you can see that we have swept it, but on futures, as you can see, price didn't sweep those lows right here. This low didn't sweep these lows, right? So I was actually waiting for price to sweep this right here, and it never happened, and it didn't happen right here. It happened here. Again, I'm trading the extremities and inside the higher time frame zone. This zone right here is actually a 5-minute. Oh, I'm sorry, it was a 15-minute zone, right? So it was a fractal, right? From this high to this low right here. Now, so trading extremities inside higher time frame zone, right? Now, price started trading to the downside, or I'm sorry, the upside. We have a sweep right here. As you can see, it happened inside a zone, a fractal from this low to this high. And then we have the CSS confirmation right here, right? I like to have a lot of confirmation, especially in this type of price action. Price started to the downside. We have a market structure break right here. Started trading to the downside and failed to make a new low, right? Failed to make it. And not a sweep, but again, equal lows. As you can see here. This low and this low right here. So price started trading to the upside. We have another sweep inside this zone. And we have the CSS. So I took my entry from the 30% of this zone, something like this. and then I was targeting this low right here for 1.8 R, and price traded almost to it. Let's remove this, almost to it with this high, and then it decided to do another sweep, yet another sweep. Right, so I took a partial loss right here, a partial loss right here. Price started going to the downside, another sweep here, and this was right here. This was the top that I was talking about. Price sweeping all of these lows into the 50% of that zone. And here we go with this. Let's check the 15 second, see if we can get. I closed the chart after the partial loss, so I wouldn't take that trade anyway. Yeah, so beautiful entry. This is the candle that caused a sweep on the 15 second. Price closed above it. Here with this green candle, return back to it, and a beautiful run to the upside, right? So I believe that this is the end of this video. This was today's price action, right? Difficult to navigate. It requires a lot of experience. You can get that experience from backtesting a lot of days, similar days like this. You can go back in time, find where price was trading in a tight range and study its characteristics, its properties, right? And try to apply the advices that I gave you. Again, trade inside, take longs or shorts inside the higher time frame zone, because even if that higher time frame zone will fail, it will likely to give you like a very small rejection, and you can capitalize on that small rejection on the lower time frame, right? You can get a quick scalp from it, right? So trade with the inside higher time frame zones, and also trade at extremities of the range. Be selective with your trades, and if you see price trading in a tight range, come back on the PM session, right? And price is likely to expand during that time. Now, if you have any questions, leave them down in the comments or DM in my Twitter account, and I will reply to you as soon as I can. Now, happy trading and good luck.